I guess the bit I want to get into is for people looking from outside. Well, at Diamonds maybe for the first time, or they know Diamonds and they're looking at you, and it's a small company. It's exploration, therefore it's high risk by nature. What do you say to those people about what it is that you are trying to build out here, and how do you ensure that you can? Because you're 7 years in the making, right? So 7 years is a long time if you were a shareholder from day one. So I imagine a lot of the people who have been trading in and out of this, but the general trend after early 2016 is down. So how do you say to people, look, we have a better sense of what we've got under the ground now. We know where we're meant to be looking. We know what we're looking for. We think that it could be there. Here are the next steps that we are going to fund, and where we're going to spend time and effort to actually create a meaningful story which doesn't have an immediate drop off, like people cashing out or whatever it is that they're doing. Because at the moment, it's hard to see why I would come into your company. I want reasons to come in to invest in you, because I think I'm going to leave my money there for a year, 2 years, 3 years. I mean, what are you telling people?
I think there are a few things, Matthew, and I'm going to go back to the points I raised earlier. Firstly, you're backing a team, and the team that we have in Botswana Diamonds comes from the African Diamonds team, which was listed about 12 years ago and developed the AK6 deposit at that time, which has become the Karowe mine. And those original investors in that company made a 25 times return on their investment. And if you followed your rights actually all the way through, you would have made a 10 times return on that investment if you sold out round about the high. So the team in which we have has a track record of delivering diamond mines as well. The team also has worked in West Africa before, and some of the projects which we looked at under the guise of West African Diamonds are now being developed under Newfield Resources. So we do have that strong kind of track record of going into areas, being able to work with the political environment we have, being able to work with the geological environment and deliver things as such. So that's the first point. The second point is what we have in Botswana Diamonds is we have, from a geological perspective, we have the most prospective area on the planet being Southern Africa. And we have it from a political perspective, we have it de-risked to some extent in that you have Botswana on this side, which is seen as the Switzerland of Africa, very, very stable, rule of law is great. You have Zimbabwe here, which is gradually moving up this way following their democratic elections. And you've got South Africa in the middle. What we try and do in order to generate the shareholder value is we don't say we need £10 million for this particular project. What we do is we try and raise a small amount of money as possible to be able to progress a project and then raise money at a higher price once we've delivered on what that project has and what we put out to do. And of course, it is relatively easy to deliver on drill holes, samples, meters, all those kind of things, but we can never guarantee what the results would be. We can say that we're going to do it cheap and we're going to do it fast and we're going to stick to our budgets. And if we're in the right areas, what that will mean is that we will drill into a kimberlite like we did about 6 weeks ago. The share price will get out. So it's an opportunity for people who came in at one price to come out at another price. And typically what happens in stocks such as ourselves is that once we get to a point where we have discovered something significant, that is when we either, the larger institutions start to become interested in us, or larger diamond companies, like with African Diamonds, which was bought out by Lucara Diamond, tend to actually become interested in you, and it becomes a corporate action, which, of course, the shareholders do well out of. That's a kind of valuation mindset.
Okay, so I mean, it's similar to any other commodity. Management team have to have been there and done that before and shown success and ability to create value. I get that. But with diamonds, because I don't know enough about them, there's not enough peer analysis done here for me to know what good looks like and what not so good looks like. So with Rockwell, I mean, what was the time period? You've spent 7 years so far. What was the time frame for Rockwell to go from beginning greenfield exploration through to actually starting to create some value? Because at $3 million, it's early stages, and I get that you're raising money in smaller increments to reduce dilution, to be able to get more information, to raise at higher rates and so forth. But that hasn't happened yet. Is there a bit of the management team which thinks, let's just raise a whole stack of money, gets us a runway for the next 2 years, we can just focus on that and not run around trying to raise money all the time, and then come back to the market with something a bit more meaningful because we've got the money to deliver something a bit more meaningful? I mean, what's that arbitrage in terms of your decision making?
Okay, if I could answer your first part of the question, it was African Diamonds. Rockwell was a diamond producer. That was another company.
Sorry,
I was involved
apologies.
with.
African Diamonds.
But African Diamonds took 7 years or thereabouts from being listed on the London AIM market and the Botswana Stock Exchange to eventually being bought out by Lukaba Diamond Corporation. And of course, there were many large spikes actually within it. If one goes back to the early stage on the drilling and the discovery of fairly significant portions of diamonds from AK6 itself, is the share price went up a multiple of, I think it went up to £1.50 at one stage after being listed at 5p within its third year of life. So, and many people sold out actually on that itself. The second part of your question about why don't we just raise £10 million and be done with it is there's a very, very careful balance of not diluting your shareholders, keeping your original shareholders with you, and incrementally taking each of your projects up the value chain. If I go back to my comment about 6,000 kimberlites, of which 600 contain diamonds and 60 are mines, it is relatively easy to go and find a kimberlite. And the market likes it because it's a discovery. But the process to evaluate that kimberlite and to get a resource is much more complex. So with the projects we have, which we have in Zimbabwe, Botswana, and South Africa, you incrementally take those along the line. And the minute you believe that they're not going to actually work out, that it doesn't have possibly significant numbers of diamonds, or maybe it has too deep cover in order to make it a mine, you leave it and move on to another project within your kind of portfolio. So you don't want to say, I'm going to spend £10 million on one project, because that project you might take to a certain point and then actually stop it, because there's actually no point actually putting money into a project which doesn't have a commercial potential of being a mine. So it's that balance. And yes, we do raise money twice every 18 months or thereabouts, but we raise a relatively small amount of money for very defined project work. And we then, obviously I do the standard investor relations things, which are very, very important, but it doesn't become an all-consuming process to actually raise the money. So you actually take your eye off the ball in terms of doing what your investors have actually mandated you to do. And that's where we've got a very strong board, with our chairman and finance director and others who are very, very deeply experienced in terms of that balance of shareholder dilution, share price growth, and the volume or quantity of work that you would actually undertake.
Totally understand that, but I'd say like sometimes you got to get that arbitrage between moving quickly, getting scale, and conserving cash and managing dilution. I understand that, and I just wonder if it was different in the world of diamonds than it was, say, in gold or copper, for instance.